Have you been surprised that the policies that have been implemented in the last few years and haven't had a greater impact on the unemployment rate? And what, in your mind, are the main explanations for why unemployment is still at the level that it's at?
Well, at some level, the issue is not unemployment itself. It's the fact that the economy hasn't grown that fast. The unemployment rate has come down about as much or even a little more than you might expect it would, given the speed of growth of the economy overall. As I was saying before, if the economy is growing a trend or less, you're just not going to see much progress in unemployment. So the real question is not, is there something wrong with the labor market? I don't think there's anything in particular wrong with the labor market. I think the question is, why isn't the economy growing faster? And here, I just think there are a number of headwinds, which I talked about in more detail in my remarks at Jackson Hole about a month ago. There are financial issues early on. There were, of course, the credit and financial instability issues that we had that were dragging down the economy. I think Europe is now part of the problem. The uncertainty about Europe is feeding through to a number of our financial variables. So that's one factor. A second factor is fiscal issues, particularly at the state and local area governments. People, maybe not, if you're involved in state government here, you might be aware of this, and I'm sure you're aware of it. But state and local governments have been contracting very sharply, laying off tens of thousands of people, cutting spending back. So the overall fiscal situation, and then when you add to that uncertainties about the fiscal cliff, et cetera, I think fiscal issues have been part of the reason for slow growth. A third one is housing. We did have a double whammy. We had a financial crisis and a housing bubble. They were connected, obviously, but we had a 30% decline in house prices and a big drop in house construction and house sales. So for a long time, that was a major drag on the economy as well. And normally, in a recovery, you would see housing as a big part of that recovery. You would see a strong housing sector. And so far, we have seen now, we've begun to see improvement in housing, but obviously we're still not seeing the kind of strength in housing that we would normally see at this stage in the business cycle. So there are a number of factors you can point to that help explain why the recovery has not been as fast as we had hoped, and the Federal Reserve was over-optimistic in terms of our forecasts of growth. But given that slow growth in output, it's not really so surprising that we haven't made more progress in unemployment. But again, as I was saying earlier, it's precisely because long-term unemployment is such a costly thing that we need to get the growth rate up, and that's what we're trying to do at the Federal Reserve.